hotels take so long to close, it's really hard to do a 1031 for me if I were to sell something. All of a sudden, I have to now identify something, so I'm identifying a lot because it might take me 2 or 3 months just to do due diligence on whether or not I even want to buy something.
Let's talk about the biggest frustration when it comes to the 1031 exchange as it
Mm,
pertains to especially a hotel developer like you when you're exiting businesses that aren't 1031 eligible and real estate where it has to be like, kind, or equal or greater value. What would you say your biggest frustration with the 1031 is?
My biggest frustration is twofold. It's very hard for an LP to come in as a 1031 into a hotel. I don't know how it is on multifamily, but some of the rules is you, you have to be on the GP side, and then that gets very frustrating for me because hotels take so long to close. It's really hard to do a 1031 for me if I were to sell something. All of a sudden, I have to now identify something, so I'm identifying a lot because it might take me 2 or 3 months just to do due diligence on whether or not I even want to buy something. And then it might take more than 6 months to actually close it. So I'm running into all these different time limitations for my 1031. So that's it makes it really frustrating, and there's some anxiety there, and just to kind of rush things when we're doing 1031s.
Absolutely. We call that the shotgun wedding,
Yeah.
where you got to get engaged in 45 days, 100, and married in 180. And you mentioned it earlier that sometimes these escrows take 6 to 9 months. Not even that. When you're building, it takes 3 years,
Mhm.
right? And so if you want these LP investors to come in to projects or deals, they have to do equal or greater value. And basically, what I've found for developers is that the 1031 exchange is essentially irrelevant because I want to
Yep.
sell my hotel for 5 or 7 or $10 million, and then I want to go buy land for 500 to $1 million and build for another 3 to 5 and build it up over a period of time. I don't want
Yeah.
to buy necessarily an existing hotel for 10
Mhm.
to 10 or $12 million, right? I want to go create more wealth through development, and or I want to sell my existing, but I don't necessarily want to buy in the same marketplace, right? I want to wait for
Mhm.
an opportunity to make sense and sell high and buy low, not sell high and buy higher. And then you add to the fact that guess what? Some LPs want to go their separate ways.
Yeah.
They've been waiting for 3 years to get anything to get cash flow, and they're waiting at that 5 or 7 to get paid out. And so most syndicators, they just don't even 1031. Right. And
Uh-huh.
that's why we want to introduce everyone who's listening to this. We have an amazing solution. And we focus on building an effective capital gains tax plan using something called a deferred sales trust, which can
Yeah.
give you flexibility and eliminate the need for the 1031 exchange when exiting $1 million assets. And so, whether you're an LP, a GP, whether you're selling stock, cryptocurrency, or a business or a primary home, we no longer have to use the 1031 exchange ever again. You can be free from that and you can move your assets into a deferred sales trust. Now,
Mhm.
here's the cool thing: if there's 10 operators or 10 GPs and 10 LPs, each of them can have their own deferred sales trust, or they can decide to pay their tax.
Mhm.
If you're doing a partial 1031 exchange and you have some extra boot left over, you can do a partial deferred sales trust. If you want to invest back and build hotels, no timing restrictions with the capital, all tax deferred, you can do that. But you want to understand what it works, how it works, and what it is, and if it's the right fit for you. You can go to capitalgainstaxsolutions.com. You can subscribe to our YouTube channel, learn all about that. You can also check out the new book called Building a Capital Gains Tax Exit Plan. We just came out, #1 bestseller with Kevin Harrington from Shark Tank. He's also in the book, and a number of other real estate developers and operators. So check that out on Amazon, Building a Capital Gains Tax Exit Plan.